Hello, everyone. Welcome back. So, of course, we've already seen the effects of the coronavirus on the stock market. We're seeing discounts left and right. Now, but the question has become will we see the effects of the coronavirus on the real estate market? And the answer to that question is it has already begun. Now, the unemployment rate has already begun to skyrocket. Unemployment is the single most influential factor of the real estate market, and this is due to just common knowledge. As consumers have no way to pay their bills, they cannot pay their rent, they cannot pay their mortgage. Therefore, landlords cannot get paid. A landlord may have another mortgage on top of that mortgage that he cannot pay. So that begins to have a snowballing effect on the economy. Also, it's twofold with unemployment because as the unemployment rate rises, less qualified buyers are on the market. Also, the demand for real estate is already suffering due to us being in quarantine. As a realtor, I know that all touring of properties has been suspended. All right, you can virtually look at them online, but you cannot go. That affects, the consumer confidence and actually being in the home and making a decision. All right, so what little buyers are on the market right now, they may not want to make a decision until they can go to that property. All right, and personally, I've seen deals fall apart within mid March. All right. So the unemployment rate is the single most influential factor of real estate. However, we won't see the full brunt and impact of the real estate market crash up until 6 months from our quarantine date. All right, so mid March we went in quarantine. We won't see the full effect up until about mid September, and this is due to industry factor in which us realtors use, and it's called the comparable market. Um, as a realtor, I can, if I wanted to list a property, I could use a home that was sold within the last 6 months. All right. So 6 months from now, being April, that would lead me to November. I can pull from a property that I sold in November and list my price according to that property. However, as the demand for real estate begins to go down, and you're going to see the prices start to stair step their way down month by month, because as the demand goes down, these sellers that already have their property listed on the market when this crash happened, they're going to have to start to meet these buyers where they are. There's going to be less buyers, so their property is sitting longer. They don't want to sit on their inventory. They might have bills, all right. So then that's when the prices start to creep down, all right. So a comparable pricing won't be fully affected until September, right? Because that's when you won't be able to pull from them high prices that were in effect when the seller had the negotiation power. So this leads us into this point. We are transitioning out of a seller's market into a buyer's market. All right. So what does that mean for regular residential buyers and investors? That means opportunity. All right. For the last 5 years, we were in a seller's market. A seller's market is when the seller has all the negotiation power. They set their price and they're going to get exactly what they asked for. Now, as we transition into a buyer's market, the buyer has the negotiation power. Now, as inventory begin to sell up because fill up and listings begin to fill up and there's less buyers, now these sellers are going to have to make their properties so attractive to these to get the attention of these little too and few buyers. All right, so the buyer has the negotiation power. So now these sellers are basically going to have an all-out price war to get to the level and the attention of these buyers. All right, so for buyers and investors, that's an opportunity. All right, an opportunity of approaching you to just be ready for. All right, so if you're a residential buyer, if you're a commercial buyer, you will see those effects somewhere around September. Now, what does that mean for furthermore for the investor? You have a chance to basically operate strategies that you did not have a chance to operate in the seller's market, such as rent to own. In the seller's market, you cannot convince a seller to rent their home for 12 months and then make a contract to buy after those 12 months are over. You know why? Because just as recent as 2019, in a seller's market, houses were selling for under 30 days. So why would I wait for 12 months to rent, or rent to you for 12 months, and then you may buy it after those 12 months, when I can sell my house within 30 days? In 2019, you can sell it within 15 days. All right. So these are the opportunities that's approaching us in the real estate field. All right. And in my field as a realtor, we already seen it coming. It's called a real estate market correction. All right. It's unrealistic that real estate prices keep rising, 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 and that's what it was doing. um, I've seen deals fall apart at the closing table mid March. So it's already began. It's nothing that we can do. All you can do is be ready. And for homeowners, this is your opportunity to lower your prices. All right, you want to lower your expenses as much as you can while you can. All right, the Fed interest rate is at 0.25 now. They lowered the rate. Now, what this means is that they're giving away money right now. You want to be able to lower your mortgage rate. For homeowners, lower your mortgage rate while you can, and while your house is still comparable. So you want to get as much as you can get for your house, for and pay the least price that you can per month. All right. So the rates are low, and while your house can still be compared to a high value, you want to go ahead and refinance and get the most you can at the time that you can get it. All right. So this is this week's Money Matters lesson on when the real estate will be affected by Corona. Give it about 6 months. All right. I enjoy you guys. Please stay tuned. Like, comment, share.